Today, many high school graduates have difficulty finding jobs that pay well enough to support a family or provide cozy living. Because of this, a large percent of graduates continue on to school. In addition, a substantial number of adults with established families return to faculty looking for better roles or a second career. The result of inflation and higher living costs have also resulted in a significant rise in college education and associated charges, e.g. textbook and laboratory fees. Many of us are not able to afford paying these charges outright, and search for alternative choices to funding their college degrees. Some are able to obtain grants, while others must target getting a loan to pay tutoring. For persons who are needed to borrow money, low-interest student loans for college are the most cost-effective route. Several sorts of loans are available for affording the cost of a college education. Bank loans or private loans may require established credit and a serious quantity of collateral that the high school graduate is unlikely to own. If the potential student's folks are ready to assist with teaching costs, those with good credit may apply for a bonus loan. Only the cost of tuition less any available grants or other financial aid could be borrowed, and the parent is needed to repay the loan within a decade. Another kind of loan is the Perkins loan, which is available to scholars with intense monetary difficulty. This loan is paid back directly to the school. Only $4,000 every year can be borrowed against the price of an undergraduate education, and the maximum that can be borrowed is $20,000. These loans are offered on a first-come, first-served basis to those with demonstrated financial need. Most students who qualify for this loan also meet factors for federal Pell Grants, another beneficial form of financial aid that does not need repayment. The Stafford loan is another type of cheap loan bankrolled by the government. Students with no established credit may be eligible to borrow money for university expenses at a low interest rate provided they meet earning standards and have not before defaulted on a student loan. Both unsubsidized and backed loans are available. If the loan is sponsored, the governing body pays the interest during the student's varsity years. These and other low-interest college loans for varsity generally need the borrower to complete a free application for Fed Student Help, or FAFSA form. Though these are just some of the most ordinarily used loans, they are by no means an exhaustive list. Students desiring to obtain a degree in health-related fields should consider the Health Education Assistance Loan, HEAL. People who are seeking careers in engineering might consider the available resources of the American Society of Mechanical Engineers, PSM. These loans often offer IRS 2 or 3% less than other federal loans. In summing up, scholars who choose to pursue a college education will benefit significantly from examining loan choices before permitting themselves to be trapped by higher interest rate loans that are harder to reimburse.